Hey, what's up everyone? Today we are going to cover a topic that most of the beginner traders really struggle with, right? How to build a profitable forex strategy that helps you make money consistently, right? I have done a video in the past. If you want to check my own strategy, one of my strategies, the hidden divergence strategy, I've done that in the past. I've linked the link in the description. This here is the thumbnail. So I've secured the link there. If you once you're done with this particular video, you can go check that link in the description, alright? So it will be very helpful for you. So I'm going to teach you the steps and the stages that you have to go through for you to form your own profitable forex strategy, right? Alright, for those who don't know me, I have been trading for two and a half years, 2 years, 4 or 5 months now. And I was failing for 2 years, 2 full years, failing over and over again. I don't call that failing. It's all about lessons, learning, tweaking here and there, forming a strategy that will help you become more and more consistent, right? So if you're new here, thank you so much. Make sure you subscribe, join the team. You can also join the team in the WhatsApp group. The link is in the description, all for free. I don't sell any courses, I don't sell any signals, so it will all be a benefit to you, all right? So also make sure you subscribe if you are new here. It will be very helpful for both you and my side, all right? So that will be very helpful, all right? Thank you for all those who have subscribed recently. I highly appreciate, all right? I'm so much honored, all right? So let's get started, all right? There are 4 stages to building a consistently profitable strategy, right? The first stage is focusing on the entries, right? So if you have a strategy that doesn't focus on the perfect entries, you always lose money because the market will most likely be moving you against you before it moves your way, right? So the first thing you need to focus on is on the entries, all right? So that is the first thing. So on my strategy, the entries are determined by the divergences, the hidden divergences, or if the market moves to the 200 moving average on the 15 minutes chart, all right? Or the third one, so the divergence, the hidden divergence, the market has moved to the moving average, and the third one on the Fibonacci, all right, on the Fibonacci 61.8, all right? So I'll be explaining that right now on the video right here, all right? So make sure you will stick around. This is exactly how I get into my entries, right? So I normally have the hidden divergences. Let me pull out the pen. I have some divergences right here. I've highlighted that all for you. So when the market pulls all the way to here and the RSI goes lower, I've discussed that in a previous video. So make sure you check the link in the description. It will explain further, all right? So as you can see here, I have my Fibonacci right here, all right, which has the 61.8 and the 78.6 or 76.8, one of the numbers, all right? It's a Fibonacci number, all right? So then I just buy right here, all right? And boom, I keep going and I keep on cashing in, all right? That is my entry strategy, right? So normally, let's check like here. The market is at a moving average right here, and the market has also pulled at a moving average, forming a divergence right here. Forming a divergence. The lower points are going higher and the lower points here are going lower. So it has formed a hidden divergence that shows continuation of the bull trend, all right? Right there. So I have to get in right there, keep on stacking until the market comes to stop me after I'm trailing my stop loss, right? That is the way. I'll talk that on the exit section. So make sure you master this. So this is how my strategy works. Either it comes to a moving average, forms a hidden divergence showing the continuation, or maybe pulls back to a Fibonacci 61.8. all right, yeah, that is it. So as you can see, I could have bought here. Okay, I bought there because I was trading this time with the team. I bought there also. We did not trade here. It was on a Good Friday. We also bought here and had that spike, and also here, all right? Yeah, that is it. That is on the hidden divergences, the moving average, and the Fibonacci 61.8. If you want to see on the reversal divergences, here is a reversal divergence that formed right here, showing an indication of a reversal of a trend, right? As you can see, the market continue to the downside, right? So I had my buy here, right here again to here. Why? Because I had this small reversal signal there. So I bought here, exited after trading the stop, right? I then had another opportunity right here, right there to buy, trail the stop. It stopped me right at a profit, right? That is how I do my things. So As you can see, we also have a continuation divergence here, hidden divergence. And if you can look at this, we can also see it is at a Fibonacci. Let me pull out the Fibonacci. I've done a video explaining on how to use the moving averages. All right, let me draw this first to show you how the Fibonacci works, how my Fibonacci works. Right there and right there. All right, yeah. So as you can see, the market has pulled all the way to the Fibonacci and then dropped very hard. So I cashed in much a lot there. All right, so after pulling back to my Fibonacci, right, so what I do, okay, I'll be explaining that on the exit section at a loss. Right, so first, master the entries. You have perfect entries. You know exactly what you are looking for when the entry is coming. All right, yeah, so that is it. Let me change that to a line. I love line chart, it's better. As you can see, we have another entry right here showing a continuation. This is a hidden divergence showing a continuation of the trend. Also, the market has come to the 200 moving average showing a markdown. Right, so I enter there and then start trailing the stop loss. All right, yeah, that is it. The second part to building a profitable forex strategy is focusing on the exits. If you have perfect entries, you also need to have perfect exits, and exits are divided into two parts. All right, the exiting at a loss and exiting at a profit. All right, you need to have all these two factors into consideration. So if you have a trade running, you need to know how far will this trade go against me. I've done a video in the past showing you on how to use a certain app that helps you to calculate your risk size using a certain app. The link is in the description. Here's a thumbnail. It will look like this. So after this, you have more options to check in the description below to help you become a profitable trader. So on the exit, you need to understand when to exit at a profit and both at a loss, because sometimes you can make money. Let's say you bought right here, the market goes for you and then comes against you. So if you don't know when to exit when the market is working for you, it could come back and hit your stop loss, yet you are in profit, right? So you need to put into consideration when to exit at a loss and when to exit at a profit, right? So here's the video explaining how I first exit at a profit, right? And then okay, at a loss, sorry, and then we will focus later on how to exit at a profit. Normally, on the exit side, I normally use the Fibonacci or the Fibonacci retracement. Once the market goes beyond the zone between the 61.8 and the 76.8 or 78.6, there, the zone in between, once the market goes beyond that, I just close the trades automatically, manually, and just call that a trade. All right, I don't have any emotions or any hard feelings, because I know most of the time when the market goes against me, I'll just still keep on holding a losing trade that I should not be holding. So I just close, no hard feelings, and I go look for and I wait for another entry signal. All right, so that is the first signal. Watch, let's talk about that right now. All right, yeah. On the exit section at a loss, okay, exiting at a loss, you need to know exactly what you are looking for. Once the market goes against you at this particular zone, the structure is invalidated. You know when exactly to exit. So this is how I exit using the Fibonacci. All right, so the market pulled back up to this zone right here, triggered, but I have my stop loss. Okay, I have my stop loss zone highlighted in between. So I'll just take a rectangle right there and highlight in between this. All right, so this is my stop loss zone, and the sky is the limit on the profit side. So I never limit my profits by saying this is the stop loss zone. This is the take profit that I'm targeting. I never control the market. What you do, you follow what the market is doing, make the money as the market makes it available to you. So you keep on trailing the stop loss. All right, once the market keeps on going your way, you keep on trailing the stop loss, securing more profit, more and more and more and more. You never know when how far the market will go. So I have this as my stop loss zone, the red zone right here, that is my stop loss zone. All right, so I'm risking this much, and the sky is the limit on the profit side. All right, so that is it. I've learned that a couple weeks ago. a couple weeks ago on trailing the stop loss. So you keep on in forex, you keep on improving day by day, day by day, day by day. You never learn enough, all right? Every day is a learning day, all right? So if you bought right here, and then you trail your stop loss, and maybe the market did not stop you, it continues, you added more position, kept on trailing both the stop losses, the market kept on going. So you probably never limit the market, you never limit the profits. So you keep on stacking, securing, stacking more positions, securing and stacking in more positions, right? It's very, very fun. It's very fun when you see yourself securing more and more profits, all right? So let's head over to exiting at a profit, all right? Right now, on the exits, we've talked about two parts of the exit. So the very first stage is focusing on the entry. The second stage is exits, in which the exits are divided into two parts: the entries and the exits at a the exit at a loss and the exit at a profit, right? So the exit, now we've already discussed the exit at a loss. So how do I deal with my exits at a profit? So once the market goes my way, I've bought right here after a hidden divergence, a Fibonacci retracement 61.8, or maybe the market moved to the moving average, 200 moving average. So if I want to exit at a profit, I normally trail the stop loss, all right? So I don't have a set stop loss. Before, I had a set stop loss. Once the market gets to this zone, boom, it takes my profit. But sometimes this is what I realized: the market normally reaches almost there, boom, it starts coming against me, right? Sometimes just takes the profit, drops, all right? Other times, in which they are most of the times, the market comes, takes my profit, and then continues higher, which I could have made double the profit that I made. So I learned how to deal with these kind of situations. This is how I deal with it. Exits at a profit are very, very key when it comes to becoming a winning, profitable trader consistently, all right? So once the market starts going my way, let's say I bought, the market starts going my way, all right? I'll just wait for a little pullback. Once the market continues up, I trail my stop loss to break even. Once the market moves higher, pulls, goes higher again, I trail my stop loss again. Once the market moves higher, trails again, stop loss lower, rises, lower, rises, stop loss, rises, lower, stop loss. So I keep on trailing the stop. So I don't have to limit myself saying that I want to make this much money or this number of pips. All right, so I'll just follow what the market is offering me. For me to show you that I'll explain that on this video right here. All right, right now, we have discussed on the entries, both on the entries and exits at a loss. All right, now it's time to discuss exits at a profit according to my strategy. You can build your own strategy based on all the four factors that I've told you, that I'm going to teach you here. But here I'm giving you an example of my own strategy, right? So what happens on the exit at a profit? This is what I do. Once I get in right here, like we have discussed on this particular trade, I keep on trailing the stop, all right? I keep on trailing the stop. So let's do that to a candlestick. The market is right here, it drops all the way to here, I break even my stop loss. I now move my stop loss from up here to break even, right? Now I have a trade that is running at a profit, free of charge. No one is charging me for that, no risk, it's all risk free, all right? So once the market pulls and started to slumps again right there, I just bring my stop loss right here, so I secure some profits, all right? So the market drops further, rises, drops, all right? What do? I secure more profits, so I keep on dropping my stop loss again, all right? Securing more profits. The market comes, rises, drops, I secure more profits, all right? And once the market is right here, as you can see, it has formed a divergence, a reversal divergence. What does the reversal divergence show me? It shows me the trend is weak. So what do? I just exit right here at a profit, all right? I close the entire trade, all right? Or maybe if I don't want to close the entire trade, I'll just bring my stop loss right there, all right? So I have secured all this trade for risking only this. I can't even draw the risk because it's too small, right? So you are risking this much and making this big. The sky is the limit, all right? So that is it. I secure that. Maybe I can decide to close partially, take out some profit, and bring on the stop loss right here in case the market goes further down, so I still have my trade, or maybe close and call it a day, all right? So that is how I exit my trades at a profit, all right? So let's head over to the risk management. All right, there we will not have any practical, just the theoretical part that will help you. All right, it will be very, very, very helpful. All right, so make sure you watch to the end. Like this video if it is very helpful. Like this video, don't forget to smash the like button. Also don't forget to subscribe, it is very, very important. All right, let me just bring this camera right here, close the subscription button, right? So make sure you subscribe right there, make sure you subscribe, and also make sure you like the video right here. All right, so is it helpful? Is this particular video helpful? Drop to the after it's over, make sure you drop down to the description. I have more videos for you, make sure you watch that. They will be very, very helpful for you. All right, the fourth point, you must put into consideration the risk management aspect on your strategy, right? So for every strategy you have to risk less and win more. So if you are risking more and winning less, you'll not last long in the game. All right, so you need to focus on winning less and winning risking less and winning more. All right, and also your strategy allows you to have a higher win rate above 60%. So you win 60, 70 or 80% of the time. With my strategy I normally win up to 80 or 85% of the time. All right, and it also has a very high risk to reward. All right, because I normally trade the stop loss, so I normally follow the trend all the way to the end. All right, so if you focus on your strategy should be focusing on the risk management aspect. If you know exactly how much you are risking, like in my case, divergences will never lie. They will never lie to you, right? Once the divergences form and it start moving your way, they never come too far for the drawdown, right? They just keep on going your way once the divergences happen, right? So that is it. You need to focus on the risk management aspect. I've done a video in the past on that. Link in the description, so you can go check that on risk management. It's a very simple app that you normally use. I've discussed that there, so make sure you go watch that. All right, so on the risk management you need to focus on the risk to reward and the win rate. So have a higher win rate and also have a better risk to reward. 1:5 or maybe above 1:3. You never lose in the forex game once you focus on that. All right, so that is it. If you are willing to check on my strategy, my hidden divergence strategy, the link is in the description. I'll be doing a video very soon on reversal divergences. That also really helps me to know when to exit some trend following entries. All right, and also give me an opportunity to short the market. Like all of you might know, I also predicted the stock market crash. All right, it happened just a few days after I predicted that. The link will also be in the description below. You can go watch that video when I predicted that, and it happened only 2 days after the prediction. All right, if you had that right at hand, you never have lost money in the stock market, in the S&P 500, and you could have made a killing by shorting the market right there. All right, yeah, go watch that. So a recap for that. Before we do the recap, okay, we don't have much to discuss on the risk management on the practically, so maybe you can just do the recap. A recap on that. Focus on the entries, focus on the exits, in which the exits are divided into two parts: the exits at a loss and exits at a profit, and also the fourth part, the risk management part. With those 4 factors put into place, focused very well, and having all those factors perfect, you never lose money in the forex market. All from my 2 years of failure in the forex market without giving up, without losing any hope on this. Right, so make sure you focus on that. Follow, subscribe, like this video. Make sure your like button right here is blue. Make sure it's always blue. If you have any question, drop at the comment section below. If you also want to connect further, make sure you join the WhatsApp group. It's free. I never sell any course, I never sell any signals. Go check that. All right, it's all free. All right, and also have a very profitable week. Bye bye.